All righty. Hey everyone, thank you for joining us for this live stream on our Georgia College Alumni Facebook page. I am Mausmi Patel. I'm the Assistant Director of Alumni Engagement here at Georgia College. And I am joined today by three community bankers here in Milledgeville. I have Thomas Weber, Derek Williams, and John Childs. I'm going to let you three introduce yourselves really quickly to our audience.
So I guess I'm first. My name's Thomas Weber. Grew up in Macon, Georgia, became a banker right out of the University of Georgia, worked for C&S Bank for 3 years, SunTrust for 17 years, Farmers Bank in Forsyth, Georgia for 16 years. Then I retired and became a consultant and have continued in that capacity in a retirement role. But I went from being the banker to being the consultant for borrowers because I realized borrowers going to the bank for a borrower is not an everyday event, and it causes them anxiety and they don't know what to say or what to do, but they're getting better at it. I'm just the liaison between the borrower and the bank in many cases. It's a pleasure to be here. I hope I can add something to the conversation. You're going to hear from two bankers who are very well adapted to this business. They are generals in the banking business. And I go ahead and promote them. They don't get their pay until after this is over. Okay. Thank you for having me on.
Thank you, Tommy. I'll take the promotion anytime. Just give me you'll bring my stars by later for my collar, I guess. But I'm Derek Williams. I am President and CEO of Century Bank and Trust here in Milledgeville. Have been here at the bank for almost 5 years. Been a community banker for 30 plus years, all over the state of Georgia, and Macon for a brief period of time, Griffin, Pine Mountain, Georgia, several different places. And just very proud to be a community banker. Love the model. We'll talk about that more in a little bit. My wife, Karen, and I have been living here, like I said, for about 5 years. And she is the director of the preschool at Noah's Ark Preschool at the Methodist Church here in Milledgeville. And just really happy to be here. Love the town and excited about opportunity to talk a little bit about some of these SBA CARES Act programs that are out there and how we'll answer some questions if there's some folks out there who have them. So thank you.
Good morning. My name is John Childs, and I'm the president and CEO of Exchange Bank here in Milledgeville. I live in Gray, and I've been in banking for over 40 years. For about 25 years in Gwinnett County at a couple of banks there, then had the opportunity to move back to Gray in 1999. And I've been with Exchange Bank since 2012. We have offices in Gray and in Lake Oconee, and 3 offices here in Milledgeville. And Derek took the promotion from Tommy, and I'll take the raise from him. So glad to get that. But thank you for this. I think this is a great format, and thank you for the invitation to join this discussion this morning.
Absolutely. Thank you all for being with us today. So really quickly to our audience that are watching, you can ask us your questions in the comments, and we'll get to those at the end. We've also got some questions for our bankers today. Hopefully we'll answer some of those along the way. And again, this discussion is about the banking regulations and how they're being affected by COVID-19 right now, and what our community can do and what our bankers can do for our community members during this time. So gentlemen, my first question for you is, what should people know about community banks and how do they differ from the larger institutions?
I'll jump into that. Yes, I'll jump into that. My entire career has been working at community banks. And the primary difference between a community bank and a regional or national bank is that we're directly involved with the communities in which we serve. For our bank, that of course is Milledgeville in Gray and the Lake Oconee market. And we are not only directly affiliated and associated with our communities, but our good and bad is a direct reflection on what's going on in the community. That's one of the reasons Derek recently served as chairman of the Chamber of Commerce I've been involved in Chamber of Commerce here and in every area that I've served, because what goes on in the community is a direct reflection on our well-being, good or bad. So we have a vested interest in promoting our communities, promoting our businesses and our customers the very best we can, because it's good for the whole community as well as our bank.
Yeah, I would add to that, John. I agree 100%. It's about being involved in the community. And I'm not one of those guys that's going to be very critical of the big banks. They serve a great purpose. We're more inclined to the term we use a lot is the relationship banking model. We are dealing with customers that we know, that we go to church with, that we go to school with, that we're involved in Little League with. We understand the business. We're more likely to be able to do something out of the box. And that's why in a lot of small communities that big banks choose not to set up in, community banks are the only option, but really they're the best option, because again, it's a more personal relationship. It's a little bit better understanding of what's going on. There's that same person to call every time. And said the big banks have a great purpose for what they do, and I'm glad they're there. But when customers are looking for a more personal relationship based model where they can have a banker that they know and they trust and understand their business a little bit better, that's where community banks come in. That's why we're valuable. And we're a very, very small percentage when you look at it of the total assets of the banking industry in the country. We're certainly the largest number of institutions, but our asset size is not that big compared to some of the big guys. But we do about more than 50% of all the small business lending and more than 75% of all the agricultural lending in the country. So when we're at 20 or 25% of the total assets, but doing 50% of the small business lending, that tells you kind of what our model stands for.
And I also just confirmed that 40 years of banking, I will tell you the backbone of small businesses is being able to go to a local banker because they know them from Little League, church, civic activities. That's where you start. In America, this is the land of the free and an opportunity. And everybody here starts 99% of the time with a local bank. Big banks come involved, yes. They usually get, when you outgrow the size of a community bank, then you end up maybe being referred by the local banker to a larger bank. So we work hand in hand with each other. But your first stop should be the community bank. Thank you.
Thank you. I agree. I think small businesses right now, especially, they are needing all the help they can get. And if they have relationships with community banks, I'm hoping they feel a little relief in that aspect. And you did touch on this a little bit, the three of you, but I want to know, how can community banks support small businesses at this time?
Well, I'll start that one a couple of ways. One, and we'll talk about this in greater detail, I'm sure, but the CARES Act does provide several different options to help. Existing 7A loans and 504 loans, SBA loans. They're paying 6 months payments, and there's the economic injury disaster loan, which has a grant associated with it. There's a lot of things you can do directly, but where banks are involved is this Paycheck Protection Program, obviously, loan that we'll talk about in greater detail. But there's a lot more than that. Community banks are there. We understand. We see what's going on in the community. So we've had a lot of customers who come to us and said, "Hey, can we take our loan that is amortizing right now and just pay the interest for a couple of 3 months until we can get some things back on track? Or can we completely defer our payments for a month or two until we see how things are going to settle out?" And those are easy fixes. We don't have a long chain of command to get all that approved. The guys who are the loan officers in the bank who are getting that question are sticking their head around the corner into my office and saying, "What do you think?" And we're making that decision quickly. So we can be a quick response for businesses that are having issues, and just sort of help guide, because most of us have seen it all. The guys that have got the color hair that we all have, they've seen a lot. And we can help these businesses talk through and share the benefit of our experience on how they might do a better job of weathering the storm.
Mausmi, this is John. I agree with what Derek says. One of the great things that we didn't talk about a while ago with community banking is the lender that has a direct relationship with that that customer, that borrower, can typically make a decision themselves. If not, they can, as Derek said, stick your head around the corner, pick up the phone and get an answer, within 30 seconds. So we can respond quickly. If decisions are made right here, right in this office, right in Derek's office there, where we can respond quickly. One of the main things is, as Derek mentioned a while ago, was the extensions or period of interest only or deferments. There's a lot of ways we can help businesses, because one of the things that we look at when we analyze a loan is we look at the cash flow. Well, a lot of businesses today, cash flow has stopped. Well, that's something we can do to help. And I think it's very, very important that we do that. Now, I will congratulate and give kudos to the regulators. They have made it perfectly clear that they want us and expect the banks to assist our customers in any way we can. And we have done that. We've done that on an individual basis, and we've done it some things across the board. But the regulators have really encouraged us to do that. So that has been very encouraging for us as well.
I just want to chime in and say, as a consultant, I tell the borrower, you've got to have the relationship. A lot of small business loans with the big banks, you literally go on a line and apply. And if you haven't been in business for more than 2 years, it's an automatic decline. When in fact, your dad and you grew up as carpenters, plumbers, electricians, small business owners, and you went out on your own, but you haven't been in business 2 years. Community banks know the relationship. They know the background. They probably know your parents, your grandparents. And honestly, that sounds antiquated, but it still works. This community bank is there in your community making decisions that a lot of decisions in the larger banks are online. They're literally answering to somebody you don't even know. To start, you start your business with a relationship at a community bank. That's all I have there.
Amazing. Thank you. And I think this is a good segue to start our discussion about the Paycheck Protection Program. I know a lot of people have questions about that. So can you touch on what that program is and who can benefit from it and what the terms are for that program?
My turn first, I guess. First of all, PPP, Payment Protection Program, guaranteed by the federal government, underwritten by bankers, approved by the SBA, but then all documents come from the bank. It is unsecured and unguaranteed by the borrower. There are several websites, one of being the ABA has produced a checklist for borrowers and a checklist for bankers. And back to the paper chase. I don't know of a small businessman who would necessarily be prepared to produce the documents without an accountant or a personal relationship with a banker. If he tried to do it on his own, he could, but that means he's got payroll. He's got 940s, 941, Schedule C, K1s, all those names that accountants have at their access. I've had accountants actually offer to their clients, hey, you qualify. On the first phone call, hey, you already qualify. You need to do this, and let me give you the name of 2 local banks. So the accounting firms know, they've actually learned the process and are asking borrowers to go get your loan. It's just, the PPP has a lot of parts to it. Rather than try to go down through the checklist, who can apply? There are rules. 500 employees, $10 million, 180 days of no payment. But 75%'s got to be used for payroll. 25% can be used for mortgage payments, interest payments. And basically you follow that. Those rules have will be refined, I'm sure, as we go. Those rules fall literally on the borrower. Follow the rules and then be prepared to produce the documents that prove that you did what you're supposed to do. Who are they going to give that information to? Their local bank. Now, the rules are 4 pages long. So prepare yourself by getting somebody to give you the rules. A banker, an accountant, a consultant can walk through the rules with you. Don't try to do that by yourself online without a little bit of input from your local banker. Okay.
Yeah, there's some good guidance out there. The Paycheck Protection Program loans were designed basically to keep businesses operating. And it's paycheck protection. So it's designed for the vast majority of the money to be used to keep your employees on board. These are for companies that's cash flow slowed down to the point that they're saying we can't afford to keep our people working. And rather than have those people go out and file unemployment, this is a loan that is made. It is a loan, not a grant. A loan has to be repaid, but a portion of the loan, up to 100% of it, depending on how you spend the money, is forgivable, which would effectively turn it into a grant. It's a loan that's made over a 24-month term at a 1% interest rate, so a very favorable interest rate. And it's calculated pretty simply by saying taking the last year or your business had to have been in business on February 15th, and come June 30th, you need to have those same number of employees working. So it's designed to keep people working, but it's an average of the last of the 12 months of 2019, their payroll expense, a monthly average times 2.5. So it's roughly 2.5 times what your monthly payroll is. It's the maximum amount you can borrow. And you need to spend, as we said, 75% of that money on additional payroll going forward to pay those people and keep them going. It's a great program. I agree with Tommy. It sometimes helps to involve your accountant or who does your payroll service or your folks who do your taxes, because a lot of those, if you use an online payroll service, an ADP or something like that, there will be, you have a really good opportunity. They've got forms that are where they'll calculate the number for you, and then the banker can tell you what supporting documentation he needs. I will, Tommy, add that you mentioned something about there's some good information available at ABA. I will, because I'm very actively involved with the only national trade association that supports only community banks, the Independent Community Bankers of America, the ICBA. They also have, ICBA.org also has some great information out there to help customers get to a community bank, first of all, and then know how to get that loan taken care of. John, what pieces did I miss on the terms and all?
I don't think so. The forgiveness part, I think, is really big and probably misunderstood by a lot of the borrowers. I think most of them are going into it thinking the whole thing will be forgiven, and it can be if it meets certain criteria, as Derek said. One thing I would like to mention, this program went into effect on April the 3rd. We got the interim final rules or guidelines at 10:35 on April the 2nd. The banking industry did. So
10:35 p.m.
Really scrambling to do the paperwork, to see how we wanted to handle this. The funds, the first round of funds ran out, I think, on April 14th to 15th. So 12 or 13 days there, the funds were ran out of that. However, they would have run out much quicker if we'd had time to prepare ourselves in the way of forms and applications and so forth. I think Derek mentioned a while ago, the banks are ready now. When this new wave is approved and the SBA turns it loose, I expect it to be soaked up, taken up in a matter of a day or two. I don't think it will last very long, because now we have got our procedures down. We've continued to accept applications for this when we felt there would be another increase in this program, and of course it looks like it will be. So it won't last long this time either.
Mausmi, let me just add that as we talked about before, and everybody's mentioned it, the key for anybody out there who's saying, I don't know if I qualify, I don't know how much good it would do me, I don't know how that, we're right here. Community bankers are right here. Pick up the phone, give your banker a call, give someone at a local community banker a call and say, hey, can you spend 20 minutes on the phone with me, talking me through this process, how it might help me if we indeed qualify or not, and what that loan might look like, which is a great advantage, again, for community banks.
Derek, one thing let me mention, and we had discussion on this when we were talking about this program when it first became available. And I don't know what your bank did, Derek, but we restricted it to our banking customers to begin with. And the reason we did that, we didn't know how many applications we would get. And we were inundated with applications from people, from business owners. But we restricted our customers because our customers have been loyal and faithful to us, and we felt we needed to address their applications first. Now, if these additional funds are not used up quickly, as I think they probably will be, at this time we can open it up, I think, to other community businesses that are not currently customers. But we felt it was important for us to make sure that we addressed our customers' needs first. So Derek, I don't know if y'all had the same feelings or not, but I think banks got a little bad rap for only accepting customer applications.
Yeah, and we did the same thing out of the block, and ours was as much for taking care of those loyal customers as much as it was that. It also was the fact that so much of what we do and government regulation requires, collect so much information identifying beneficial ownership of companies and articles of incorporation and ways to identify these companies. Our existing customers, we already had a lot of that information, so it made the process go a lot quicker. But you know, as I'm sure you guys did as well, there's also some folks out there that we've been trying to get to do business with us for a long time that had some inquiries, and we found a way to make room for a lot of those folks too. We're always looking for new customers, as you guys are, and hopefully this next round we'll be able to really show the people who haven't banked with a community bank how nimble and how quickly we can get stuff done.
Good point.
I want to read one thing to you off the guidance, because I think a lot of borrowers are confused. Who can apply? You can have nonprofits, veteran organizations, tribal businesses, sole proprietorships, self-employed individuals, independent contractors with under 500 or fewer employees. I think that tells you, business owner, that you know who you are. If you're a sole proprietor or a partnership, you can qualify. Don't stop thinking you have to be Fortune 500. That is not what this is all about.
Good point.
Next question.
Really good point. To go off of that a little bit, once business owners have determined that they qualify with the help of an accountant or their community banks, can they apply for the loan through the banks, or do they need to go somewhere else to do that?
No, the application is through the banks. This is one that the banks make these loans. It's SBA guaranteed, not an SBA direct. So they do apply with the banks, and we can help them most. Most of us are set up with online portals so they can upload documents and get the stuff in this social distancing environment that we're in, and also have the documents signed via some kind of an online signature. To keep people from having to come in and get, being that hands involved in the process. So, but you do apply directly to the banks, and we make the loans, and the bankers will also be responsible for the calculating or helping you calculate the forgiveness piece, or taking the documentation you provide. One important thing to know is, and we haven't mentioned this, it's from the moment the money is dispersed, and the SBA requires us to disperse the first disbursement of the loan 10 days after we get the approval, to get it in the hands of the borrowers as quickly as possible. But from the moment you get your first dollar, you have 8 weeks to spend that money for forgivable expenses, payroll, and other things. And again, the SBA website and some of the banking association websites are very clear about what is forgivable and what is not. But again, I think what I don't want to lose track of, and I don't want any of the customers lose track of, is this is designed to keep your folks working. So there can be decreases in the forgiveness availability if you let people go, and you have less employees on June 30th than you had at February 15th. If you cut people's pay more than 25%, it can negatively impact your forgiveness. So the premise of this and the purpose of this, I think some companies see it as a cash flow, as a cash flow savior. The premise is to keep your folks working and keep people getting paychecks, which is why it's called the Paycheck Protection Program. So yeah, but you apply directly to the banks, and the banks handle the whole process. Their customers not involved with the SBA at all in the PPP program.
Good
Okay,
point.
thank you.
Good point about preserving the payroll, bringing your employees back. By the way, some people are fearful of going to the bank. They don't know what to say. They need somebody to go with them. There are approved agents, attorneys, accountants, consultants, anyone that can prepare the application, someone at the SBA, a loan broker. All those people qualify to help you apply for your loan. They do get paid, but they do not get paid by you. They get paid by the bank. There is a provision to pay them a fee for doing the work for you. Again, small businessmen that are working every day, trying to hang in there, need to keep their employees. They can qualify for this loan, and they can have it, they can turn it over to their banker and their accountant to get it done and preserve their pay, their employees, because a lot of work is slowed down, not stopped, but slowed down. This is how you keep them employed. This is how you keep it going.
Mausmi, let me change direction a little bit, talk about a little something different. This has been very important, I think. But everyone on this panel, and I guess everyone in banking, this is the first time we've had experience with something like this. We've been through recessions and difficult times, but this is the first time any of us or anybody that's working in the banking industry now has been through something like this. And we had a discussion earlier this morning with our senior management. And one of the things that I think is important from this experience is what we've learned from it. You know, and there's been a lot of changes, and bankers, unfortunately, have a tendency to do things like we always have done. You know, if it's not broke, don't fix it. And we get in a habit, I think, of doing the same thing over and over and over. And sometimes that's okay, and sometimes it's not the best way to do things. But I think we've all learned going through this some different things that can help us in the future. One is, and Derek, I know y'all have done this as well, is we have 21 people out of about 80 total employment that's working from home, either full-time or part-time. That's over 25% of our employee force here. You know, we've all of us have closed the lobbies for customer traffic and making them accessible by appointment only. Our drive-ins have remained open, and all the internet banking, all that we have really pushed has really saved us, to be honest with you. We've had very, very few complaints from our customers after the first day or so that our lobbies were closed. A lot of them are using the things that are the digital platforms that we have available. And it's really opened our eyes on possibly the way of doing business going forward. You know, what we've learned from this and what we can do better, what we can make available better for our customers, products and services, and just different things that we can do. So I think even though this has been very hard to go through, I think it's really been an experience that we can take forward and make ourselves better banks, that we can provide better services and products for our customers. And, you know, one thing I think from our customers' point of view that we've probably learned from our personal lives as well, you know, I may not need to go to the bank every day like I used to, just like we've learned that we don't need to go to the grocery store, as often we used to. We don't need to get our haircuts as often as we used to. A lot of things that we kind of got in that habit of thinking it's a necessity really is not. And it's a different way of doing things. And I think this experience has been really good for us as we focus on a different way of banking. And as I said, different way of providing products and services for our customers.
Yeah, absolutely. Everything is changing right now, and we're all learning as we go. So it's very true. Before I move on to my next question, I want to remind our audience to submit your questions in our comment section, and we'll get to those at the end. I'm going to move away from the PPP program. I think you guys have done an amazing job sharing information on that. And to recap, our audience has resources within their community and online to figure out what documents you need to apply for that loan. So I think another big question everyone has is about the stimulus checks. Those have started hitting bank accounts and people are starting to receive those. Do you have any recommendations on what people should do with those stimulus checks, possibly in anticipation of another economic downfall?
Well,
Yeah,
I have opinion on that, Derek. I guess the purpose or the intent of these was to go out and spend it. But if it were me, I think I might sit on it for a while. Not knowing what is coming tomorrow or next week or next month, I would be very, very hesitant to go out and spend it on a big screen TV or something. I know that may be the intent, but I would be very hesitant to do that.
Yeah, I agree, John, 100%. I do think though that it's that very necessary expenses are part of the stimulation of the economy. So I think the folks this is really beneficial for are those folks who will use that money to go out and buy the necessities that they need, continue to buy food and groceries and that sort of thing. So I'm like John. I think if from that perspective, I would take the pool that I have, I would add that to it, and then I would keep doing what I'm doing. I would keep operating on a day-to-day basis. I certainly there's all kinds of things out on the internet that says, boy, you really need to jump in the market with some of that money, and forget all that. This is about taking care of ourselves and making sure that we can continue to put food on the table, and as we wait for things to open back up in our economy to sort of get going again. So I wouldn't get crazy with it, but I would sure continue to spend it on the things that you need.
I think a big key to this money, and it's on the internet, it's out there. First of all, you can contact your mortgage banker on your mortgage. You can contact your landlord. In a lot of cases, they're giving you 60, 90 days of relief, tacking payments onto the end of the mortgage, excusing 90 days worth of rent. So honestly, $1,200, the most important thing you can do with it is feed your family. If you can get and look, it's a pass. It's not going to hurt your credit if they do it right. And Fannie Mae, Freddie Mac have already said, we will give you up to 12 months relief on your mortgage payments. So you got to find out. And the first step is you got to pick up the phone and call your mortgage company and see what they'll do. If that relief comes, then the next step is buy groceries, stay fit in your home by feeding your family first, and use that money wisely. But prioritize what's the most important thing we need to cover in this household. I don't think that $1,200 got to be invested in something that's not practical to survive until this is over.
Tommy, that's a good point. And not only during this time, I think it's so important that you communicate with your who's ever loaning you your mortgage or your car payment or your credit card or whatever it might be. Contact them before it gets 30 days or 60 days or 90 days past you. It's a lot easier to work on something beforehand than after the fact. So many companies or lenders, especially mortgage companies, they have programs for people, but often you have to contact them. So, and as I said, that's not the case only now. That's good advice anytime. Anytime
Exactly.
you're having problems on a loan or anything, that's what we're here for. That's what we want to hear. And we're here to try to help. But a lot of times people, I don't know if they're embarrassed or ashamed or wait too long, when we can't do something. So I would encourage anyone who's listening, if you are having concerns or problems, contact the lender, no matter who it is, and let them know. Most of them right now have programs to help out.
And Mausmi, let me say this too. We've had a lot of phone calls from people asking, obviously, has that stimulus check been deposited into their accounts, direct deposit? First of all, have a little sympathy, pity on the bankers if you're one of those people calling. We can't tell you where it is. We can only tell you whether it's here or not. But there are I know there's a website. I don't know what it is, but I'm sure if you just Google Google it, you can find out on the stimulus checks. There's a website where you contact the government and give them your correct bank account information for a direct deposit. Sometimes, for example, somebody might not have filed a 19 tax return yet. They may be using a bank account that you use for an 18 tax return, and maybe that account's no longer active. Well, more than likely, if they send the money to that account, that bank is going to turn it around if that account's not open anymore, and they're going to end up sending you a check, which is going to prolong things. I'm not sure whether it's too far into the process to give them that information now, since most of that money's been distributed, but it's a good practice to at least let them know where you want that money. It should speed up the process if you can let them know where you want that money deposited.
Wonderful. Thank you guys so much. That was the last question I had for you, and it looks like we don't have any additional questions in the comments. I think you all did a great job answering most of the heavy questions on everyone's minds right now. So thank you for joining us. To our Georgia College audience, we're going to make this recording available to you if you would like to return to it in the future. And if our audience has more questions, of course, reach out to your community banks, reach out to your accountants and all of your resources to help out during this time.
Gentlemen, we're here to help.
Exactly. Any last words before we end the stream today?
No, nothing other than, from my perspective, just again, I appreciate the opportunity to share some of this. I'm a big believer in the model. It works. We community banks do business with people we know. We take deposits in a community that we know from people that we know, and we lend it in that same community to people that we know. It's a great model. It's always worked, and I think it always will work. So if you've not tried it, if you're one of those many people who assume that a big bank is a better place to have your checking account because they've got more ATMs, now that people are getting money back on debit cards, give it a shot. Call up a community bank, take a look at the level of service that you get, and I believe you'll find a home.
I had a client ask me or ask them, what do you think is important about the whole program? Patience and perseverance was the answer I got. And same thing with your bank. You got to make the call. They are prepared. They know what you're calling about. You're going to be amazed at the attitude of, we're here to help you get through these hard times. It's an unusual world we're in, never before. And if it comes back, we'll be better prepared. But take advantage of the bank that's offering you. Give us a phone call, let us help you out, and then persevere the next 90 days, I hope.
Mausmi, thank you. I appreciate the invitation to join this conversation, and I think it was some good information we were able to pass on to your listeners and hopefully business customers out there as well. So again, thank you for your invitation, and appreciate being able to participate this morning.
Thank you.
My pleasure. Thank you.
Absolutely. Thank you so much for joining us. To our Georgia College community, we're doing more live streams. Later today at 12:30, we'll have yoga with Alex, and more to come later this week. So thank you all for joining us, and have a wonderful rest of your day.